is all about.
Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Over 90% of promoter stake in Zee Entertainment has been pledged. The management disclosed indirect pledges in a conference call as per new SEBI regulations. Yes Bank has filed an official complaint over alleged fake news being circulated on social media about the financial health of the lender. Former chairman of Punjab and Maharashtra Cooperative Bank, Waryam Singh, has been arrested and sent to police custody till the 9th of October. A special vacation bench of the Supreme Court will hear a public interest litigation against the felling of trees in the RA colony area of Mumbai at 10 a.m. today. And a bunch of index stocks which will be in focus today. We'll talk about all of them. But first, let's take a look at the trade setup and the global setup to start off with. Now, what happened in Friday is that the US markets did extremely well for themselves. They ended about 1.5% higher, in fact 1.4% apiece for each of the three markets, even though for the week the S&P 500 and the Dow may have showed the third straight week of decline and the Nasdaq just managed to eke out gains, but it was a strong close on Friday, which was important. Now, what happened amongst other things is that the US unemployment, the jobs data that came out from the US was a really remarkable data because it hit the sweet spot. It was neither too strong to deter the Fed from a Fed cut. It was not so weak as to make people believe that there is some recessionary issue coming. So the unemployment rate fell to about 50-year lows. And all of this and the other things led to the markets doing what they're doing. And a lot of people are now starting to come out and say, at least BlackRock and JP Morgan are coming out and saying that investors who fear that we might see a repeat of 2008 are actually being too cautious. And even the data points suggest that there is favor in buying stocks worldwide as opposed to bonds, by the way. If you just look at this chart that is, I think, up there on the Bloomberg terminal, but also something that is said by Citigroup, stocks look cheap relative to bonds worldwide as the yield gap has widened. And it's gone up quite considerably in the last month and a half odd. And therefore, maybe, just maybe, there is merit in trying to own stocks. I know you can slice and dice data either direction, but this is what's some of the opinion that has been featured on Bloomberg, which I'm bringing to you. Now, what does all of this and what's happened on Friday do to our markets? Post the policy, we saw a fall and a free fall of sorts because from the highs, we corrected quite a bit. And it was the worst week in 6 months for the Nifty, falling towards or very close towards the 50-day moving average. The three times in the past 6 months that the Nifty 50s corrected the 50-day moving average from the top, it's gone down and corrected quite a bit more. So today's performance will be fairly crucial for our markets. Of course, if you need the globe stays positive, we might have a good day during the course of the week because we are near levels from where we would tend to bounce back, the 50-day moving average, as I said. So if the world stays okay, we should be hunky-dory, and the earnings will, of course, take focus during the second half. But speaking of the world, while the US markets have done extremely well, it's not showing off or rubbing off on the rest of the Asian screen. So Nikkei, about 55 points in the red. It's not the best of screens for Asia. Let's wait and watch how we trade. A lot of index stocks, as I said, would be in focus today. There are 3 or 4 large names which will be dominating trade today. Firstly, of course, Zee. And Friday late night at about 10 p.m., I think, is when this news came out about promoter creating additional encumbrance of 10.71% stake pursuant to the loan agreement with VTB Capital in 2017. Now, most brokerages which have come out with their notes on this have said that this shouldn't be viewed positively. Does the stock correct further from where it is right now? In all likelihood, it could. But let's wait and watch what happens. This is not a positive development. It gives, there's some VTB Capital has come to the rescue. You can argue it whichever, slice and dice it whichever way. But this is not the most positive news. We'll, of course, talk about that on First Word in detail, so I won't dwell too much on it. But watch out for Zee Entertainment, big stock in focus today. As would be 2 financial index heavyweights. HDFC Bank, they have come out with a quarterly update. Advances up 8%, deposits up 7% on a quarter-on-quarter basis. Morgan Stanley has gone out and said that the initial trends appear to be better than anticipated. So let's wait and watch if HDFC Bank, which also has had a slightly tough last week, react slightly positively on a day like this today. If it does, then it's great for the bank nifty as well. Keep that in mind, as also for the nifty. It's a big heavyweight. Bajaj Finance is the other one. AUMs in Q2 have risen 38%. Now there is a moderation in the new customer acquisition, which is in line with the management commentary. It's a stock that's run up quite a bit, but it's got a fundraising plan in place, it's happened in line with what the management has said. So I don't quite know which way the stock could react. Maybe a bit negative. Let's wait and watch. Difficult to call with Bajaj Finance. Dips are being bought into. So let's wait and watch what happens today. Not as crystal clear as HDFC Bank, I would reckon. What is crystal clear is Container Corp. The DGFT has disallowed a claim, which is substantial because out of 1,044 crore claim that Container Corp had said, DGFT is disallowed about 861 crores. This is a part of claim under the Service Export from India scheme. Now, Concor has stated that it will contest the decision of DGFT, which you would expect, but because the stock has also had a bit of a run-up, I would expect that the stock could have a bit of a negative reaction in the session today. Glenmark could have a negative reaction. The US FDA warning letter for Baddi unit has come in. The unit is expected to contribute about 7% of US sales in FY20. Do watch out for that one. Lastly, Talwarkar Health Club is not a big stock, but they've defaulted on payment of 2 NCDs and a term loan aggregating to 63 crores. Well, no surprise as to which way the stock would react. I would be surprised if it reacts positively. Let's wait and watch. However, let's tell you what's lined up on first for today. As I said, Zee, big news. Yatin Mota will tell us about the company's latest disclosures and the importance of the same. Shefali Malik will then bring us HDFC Bank and Bajaj Finance's quarterly updates, two large stocks, very important to talk about them. 80% of Container Corporation's claims for export incentives have been disallowed. Somit Sarkar gets us the impact. And 1 in every 4 stocks are trading below the lowest analyst targets. Yash Upadhyay will join us with that list. The amount of stake pledged by Zee Entertainment promoters is much higher than earlier reported. Debt has been raised against 90% of their stake. If you include the indirect pledges, Zee disclosed the indirect pledges over the weekend. I repeat, as late as Friday 10 p.m. After SEBI tightened the regulations, Yatin Mota is standing by with the latest and the likely impact of these disclosures. Good morning, Yatin. Friday evening and the whole of Saturday went in Zee. Give us the takeaways.
So Neeraj, as you're mentioning in the read that 90% of the promoter stake is now pledged. Remember, SEBI has come out with norms in order to define pledge shares, and beyond a particular threshold, if the pledge increase, then of course the promoters have to disclose that. In case of Zee, now nearly 90% of their holding is pledged. Remember, this includes the indirect holding. A direct pledge would be something like a loan against shares, in which you usually deposit the shares with the lender or the trusteeship, and you get money in lieu of those shares. Number 2 is an indirect pledge. Through a loan agreement, there could be a lien or a charge or a indirect kind of a security with respect to your shares, and such indirect holdings or such indirect pledges have been disclosed by financial institutions. As you were mentioning, Friday late evening, Zee disclosed that particular event, in which nearly 10% of company's equity was pledged, and that was disclosed to a Russian entity called VTB Capital. Essentially, Saturday evening, the management held a conference call in order to explain the entire scenario, in which they clearly said that the SEBI regulations now even mandate the promoters to disclose the overall pledged shares, including the indirect one, and hence this disclosure. More importantly, a 90% pledge stake is nearly half of their current holding. Remember, a lot of lenders sold their shares in the open market for Zee, and more importantly, the Zee promoters also sold their substantial stake to Oppenheimer funds. That transaction also we'll touch upon later, but now the promoter holding in Zee is 22%, of which 90% is pledged. Of course, the management also disclosed in the conference call that this VTB Capital liability, or the loan has been already accounted for. So there is no increase in the loan liability at the promoter level after this pledge was disclosed. So the total, promoter debt stands as it is, and this is with respect to the SEBI new norms which kicked in on 1st October, which say that not only pledge shares of more than 20% of total share capital or 50% of the promoter holding needs to be disclosed with a reason. They also, amended the definition of encumbrance to include direct and indirect pledges. So, that is the regulation which kicked in from 1st October. A lot of company, I believe, would be now disclosing their indirect pledges also. As I was mentioning, in this June quarter, the promoters' shareholding was 35.8%, which with almost 64% direct pledge shares being reported. Now, the holding is close to 20% with the current pledge at about 90%. So that is the fresh disclosure coming in. Punit Goenka, who was addressing the analyst conference call, also said that nearly a 2.3% stake to Oppenheimer, that sale is pending. This is because of the silent period which kicked in, because of which the transaction could not conclude. And once the quarterly results are announced within a time frame of 2 weeks, then these shares would be payable. With respect to VTB, they said that they are already in conversation with VTB in order to repay the overall debt. Of course, the loans maturing with respect to VTB Capital still are 1 year away. So that is one update, importantly, that the management said. And in terms of the loan breakup, the management gave ballpark figures in which they said the total promoter debt in the personal capacity stood at 7,000 crores. Out of this 7,000, 5,000 is with respect to domestic NBFCs as well as domestic mutual funds and domestic entities, and the remainder 2,000 crores is due with respect to the overseas entity or the foreign lenders. So this is what the management updated with respect to their overall pledge shares which were indirect, and also the total promoter level debt which was disclosed to the public.
That's very interesting. Yatin, thanks so much for putting all of this into perspective. It's very interesting to see what the stock could do today, Yatin. That's my question, because, I was looking at what the brokerages have said as well. A couple of people, Axis Capital, for example, has placed it under review from a buy. CLAS has cut the target. But JP Morgan maintains the neutral. They are saying that there is uncertainty around this reduction, but they are not changing the target price or the rating as well. Any sense that you get by talking to dealers or otherwise as to what the stock will do today? So,
Neeraj, on Saturday, the query or the common question or the common concern from the analyst community was that since now 90% of the shares are pledged, loans are probably maturing in the next 1 year, what happens from here on? The management said that they are also looking at the non-media end of the business, which could be sold, which includes their solar power plants. They also have various assets in the overseas market. They also have their road projects. However, the management also clarified one thing, that the lenders can sell the shares. So there is no restriction on the lenders to sell the shares and recover their dues. So clearly, the management said that the lenders are free to sell the shares in the open market. However, at the current market price, the valuation according to the management is suppressed, and whichever entity or the NBFC or any lender sells the shares in the open market, they probably are destroying value not only for themselves but also for the promoters. And in most likelihood, nobody is likely to take that step because they have a standstill, with the mutual funds as disclosed, to the public. But clearly, there was one concern that since almost everything that they own is pledged, what if tomorrow some lenders already, start selling the shares, given the insufficiency of cover which could arise, because almost every shares are, a single share is pledged. And no further security can be provided by the promoters in terms of the further pledge shares.
Well, the promoters certainly see value in intrinsic value. Sadly, the market or nobody else but the promoters is seeing this. But Yatin, thanks so much for putting this into perspective. Zee Entertainment, it's an interesting stock. Difficult to quite certainly say what could happen, but will react for sure. Could react negatively. Let's wait and watch. It's had a bit of a reaction. Frankly, fundamentally, maybe some bulls would argue that there is value at this price, but a lot of technical triggers up at bay for Zee, so difficult to say what will happen in the near term. Well, let's try and talk about the other two index names which have come out with their quarterly updates. HDFC Bank has come out with an update on its operational performance for the second quarter. Have they shown a pickup after a disappointing first quarter compared to relative to their standards? Shefali Malik puts things into perspective. Shefali, good morning. How did you read into those updates?
Well, definitely good set of numbers put out by HDFC Bank, especially after very weak, operational numbers put out by the bank in the first quarter. So we just had a 1% sequential growth in Q1 in terms of advances. This time it's been 8% sequential growth and about 19.5% YOY growth. So good set of advances growth. relatively speaking. So we've had those days for HDFC Bank in excess of 20%, and there was an era where the bank would not report anything less than 30%. So, but in the current context, these are good set of numbers. And deposits growth, again a very strong set of numbers, about 22.5% YOY growth and about 7% sequential growth. Going back to advances for a bit, 10% of the advances growth has actually come in from the loans purchased from HDFC. So that is also one thing to keep in mind. But they do that, every quarter because of the arrangement between HDFC and HDFC Bank. So this time that has again contributed to the overall loan growth. Coming to CASA ratio, that stood at about 39.2% versus about 42% on a YOY basis and 39.7% on a sequential basis. So a mild downtick on a sequential basis in the CASA ratio. That's because of the shift towards the term deposits. That is a trend that we've been seeing for most banks. So these are good numbers for HDFC Bank, but whether this replicates in the other banks, I have a doubt about that, because because most of the other banks in the private sector space, barring a Kotak maybe, yes, IndusInd, these might be focusing on consolidating their books because of the times that they are going through. So it may not come to reflect in the books of a couple of other banks. PSU banks, about 10 of them are going through a merger process. Okay. So it'll be interesting to see what trends actually shape up there. SBI, because of the government mandate to push the loan growth, may put across good loan growth. But that's HDFC Bank standalone. It has posted good numbers.
Okay, I think Bajaj Finance came out with its quarterly update too. AUM growth continues to remain healthy?
Yes, healthy, but lesser than before. So this time it's about 38%, but last 3 quarters it was doing AUM growth of 40% plus. So from that level it has come off for obvious reasons, because in last quarter the management did say as part of its earnings that they are cutting down on certain segment of the customers and in certain categories. So that has come to reflect in the AUM growth, but nonetheless 38% is a very strong number. And some other details that they've put out: customer franchisees stood at about 38.7 million versus 30.1 million on a YOY basis and 36.9 on a sequential basis. They acquired 1.9 million customers during Q2 versus 2.5. So there's been a downtick there because of the slightly cautious approach that the company is taking. And the new loans booked during Q2 was also lesser, about roughly 10% lesser at about 6.6 million, 10% lesser on a sequential basis. And also as part of this release, they said that during the quarter they entered into arrangement with various banks to avail ECB loans up to $575 million, but so far they've not raised any, but it's just an arrangement that they enter into. But for Bajaj Finance also good numbers, but as guided by the management, slightly lesser than before.
Yeah, I think the markets would probably take that positively, because here's an entity which has the chance to grow because the companies around it aren't growing at the same pace and there is demand. But because of the fact that the situation may not be as conducive to growing at a breakneck speed, they themselves are coming off or taking the foot off the pedal, not in a meaningful way. 38% is not weak at all. It's a strong number. But they are saying that we do not want to grow at 41%. We can grow if we want to, but we don't want to grow because we want to maintain, quote unquote, the asset quality.
Yes, absolutely. In fact, asset quality will be the key to watch out for. It might remain to be sound still, but yes, that will be a key monitorable again.
Yeah, if you just go by the Shefali, thanks so much for that. But if you just go by the history, I think in the past, at a point of time when auto loans had started looking a bit sketchy, or a particular segment had started looking sketchy, they just shut that segment off. The headline number may not impact as much, but you do not grow at a breakneck speed at the cost of asset quality. I think that's been the mantra, and I don't think the street will take this too negatively. Let's wait and watch. Shefali, thanks for putting that into perspective. So that's as far as the two big heavyweight financial names go. Let's see how both of them react in the session today. How they react could well have a bearing on what the Bank Nifty does in the session today. Keep that at the back of your mind. Okay, one stock that might not react that well, and the news around Concord is this: the Directorate General of Foreign Trade rejected 80% of Container Corporation's claims for export incentives. Somal Sarkar joins us with the impact on the stock. And the reason we put this in first word is because there is likely, this news is very big from a Concord perspective, isn't it, Sumit?
Well, yeah, it is a big impact because if you see, Citi has cited that the post-tax impact on the EPS would be close to 10.2 rupees. That is nearly 50% of what the company had than EPS in FY19. So what has happened that in an exchange filing, the company said that DGFT, that is Directorate General of Foreign Trade, has disallowed claims worth nearly 861 crore rupees out of the total 1,044 crore rupees claimed of the company that it had recognized. Now, it has stated that the services provided by Container Corp towards custom transit of sealed containers by railway transport are not eligible under SEIS benefit. So firstly, let's understand what is this SEIS benefit. Now, SEIS was introduced in 2015 as part of the new foreign trade policy. Now, under this scheme, the government incentivizes exporters, which includes all types of service providers who are located in India, irrespective of the nature of their organization, with nearly 3 to 5% of the benefits of the total amount of services they provide. Now, Container Corp till date had booked an SEIS benefit of close to 1,044 crore rupees for FY16 to FY19, out of which 82%, that is 861 crore rupees, has been disallowed. Now, the company will be contesting this decision of DGFT. That is what the company said in its release. Now, SEIS income, if you see an overall basis, before this DGFT clarification came in, accounted for nearly 21% of Container Corp's profit over FY16 to FY19. Now, if you remember in FY19 audit report, the independent auditors of this Container Corp had also had raised concern about this in their key audit matters. Now, Container Corp's management had recognized this as income receivable under the scheme, but the claims filed by the company had so far not been approved by the concerned department. Now, and because of this, the auditor had raised concern regarding the fair value of the amount receivable, as the same was factored in the balance sheet as a recognized income, but no amount had been realized so far at the end of financial year 2019. Now, according to Citi Research, this disallowance amount may have to be written off as an exceptional item for Container Corp and may have an impact of close to 10.2 rupees per share on a post-tax basis. To put this in perspective, for FY19, the company had an EPS of nearly 20.1 rupees, while for FY20, the company is expected to do an EPS of close to 21 rupees. Now, this is according to Bloomberg consensus estimate. So, nearly this 10.2 rupees impact is nearly 50% of the EPS that the company can do. But however, this is an exceptional loss that the company might have to book, and there won't be any cash loss so far because the company had not received this amount. So, no cash loss, but an impact on profit might definitely come in. However, the brokerage believes that this impact is manageable for Container Corp due to its market leadership and the potential benefit due to DFC commissioning over the next 2 years. Also, Morgan Stanley in its note downgraded its rating on the stock to equal weight from an overweight rating, citing the recent outperformance in the stock price and the disallowance of this SEIS claim. Now, it reduced its earnings per share for FY20 to FY22 by 12 to 14% to factor in this disallowance of SEIS income, and some part of this was also marginally offset by the lower corporate tax rate that was recently announced by the finance minister.
Okay, Sumit, did I hear you say that the impact might be 50% of the FY19 EPS?
And FY20 also. FY20, the Bloomberg consensus estimate for EPS is close to 21 rupees. And Citi is saying that on a post-tax basis, the EPS impact would be close to 10.2 rupees. That is nearly 50% of the EPS. However, this would be an exceptional loss though, not an operational loss and not a cash loss for the company.
Nevertheless, we will probably see an impact on the stock today
definitely.
for sure. Sumit, thanks so much for putting that into perspective. Well, let's go on course. Certainly amongst the stocks that you should monitor today. The recent correction has taken many stocks in the broader markets to historic lows. In fact, 1 in every 4 stocks amongst them are trading below even the lowest target set by analysts. Yash Upadhyay is standing with a snapshot. Yash, good morning.
Morning, Neeraj. So what we've done is essentially we are trying to look at the most widely tracked Indian stocks, and by widely tracked we define it by at least 10 analysts covering the stock, and that brings us to a universe of 255 stocks, out of which 66 companies are trading below the lowest target price set by the consensus of analysts that are available on the Bloomberg terminal. So that makes it nearly 25% or more than 25% of the entire universe, quoting at a price which is lower than the lowest target price that the analysts have on the counter. Now, in terms of the individual sectors, let's take a look at the sectoral snapshot and which are the companies which dominate this list. And right at the top is financials. Almost 15 out of these 66 stocks are made up of financials along with industrials too. So they both combined account for nearly 50% of the entire universe, along with notable names from the IT space, basic materials, which is basically your metals, and mining names. Consumer good companies and healthcare are the other few sectors which have the most number of stocks that are trading significantly lower than even the lowest analyst target price. Now, in terms of individual stocks, and we'll try and take a look at the top 10 stocks which are quoting the lowest as compared to the lowest target price. So the difference between the current market price and the lowest target price is the highest, and right at the top of the list is Zee Infra. It's almost down over 30% from the lowest target price. So it's currently quoting at around 209 rupees, and the lowest target price is about 300. And coincidentally, all 13 analysts tracking the stock have 100% buy rating on the stock, and most of these analysts have got their estimates completely off the mark on the count, and that is mainly on account of the high debt the company has on its books, which has adversely impacted their financials. For NCC, we saw a big drop come in the month of May after the newly appointed Andhra government rejected some of the orders which were sanctioned by the previous government, which again NCC is the biggest beneficiary of those accounts, had to see a big selling on account of that. So there the estimates have gone wrong. Indian Bank, again there are concerns with respect to asset quality, delay in recoveries from the stress sector, as well as the uncertainty from the merger with Allahabad Bank. That is something that has missed the most of the analysts' estimates. For ENIL, it has been the sharp degrowth in their ad revenue growth on account of the economic slowdown, as well as challenges from the ramp up of its non-radio business and the increased adoption of digital content, which has been one of the overhangs for the stock. For Sterlite Tech, it has been consistent issues with respect to promoter pledged holding, the lower margins on account of the weak fiber cable prices. That has beared down on the stock price. It has fallen almost 30-35% on a year-to-date basis. The next stock on the list is Dhanuka Agritech. It has been impacted adversely on account of the delayed onset of monsoon, as well as the fact that most of the factories in China which are shut down have spiked up their raw material prices, and as a result of which we saw the margins for the company fall to a 5-quarter low. For HCG, which is Healthcare Global, the high debt the company took in order to fund their capex plan, that has hurt their bottom line, and in the first quarter of FY20 their net loss in fact more than doubled over the previous quarter. So their financials have been completely impacted on account of the high debt, and that high debt is a common theme that you will see across most of these names as well. Capacite Infra, it is one of the infra companies which has a higher exposure to real estate, and the persistent slowdown that we've seen in the real estate space, that has not gone down well, in addition to the liquidity crisis that is there in the system. So that has impacted the stock negatively. For Karur Vysya Bank, again concerns with respect to the asset quality, contraction in their advance book, mainly on account of the stress in the commercial segment, that has negatively impacted the stock price. And lastly, for Ashoka Buildcon, it's the other stock in this list, which by the way has 100% buy rating. So all of the 11 analysts tracking the stock on the Bloomberg terminal, they have 100% buy rating. And look at the stock, it's at 97, and the lowest target price being 120. So again, a 20-25% cut, and that is on account of the weak order inflow from NHAI, as well as delay with respect to the receiving of appointment date with respect to 3 of its HAM projects, and again the high debt the company has on its book to service most of these projects. That has gone down negatively for the stock price.
Very quickly, Yash, tell us about the most bullish and the bearish bets on these stocks and which brokerages they are from.
So we've tried to take a look at which are the brokerages which have the highest as well as the lowest. So the lowest target price were from some of the so it's a diverse universe over here. It starts from Kavi, CIMB, BNK, Aquarius. So a lot of the brokerages out there with mixed target price, and if the kind of fall that we've seen compared to the lowest target price, the stocks are quoting almost 30%, 35% low. Look at the highest target price. Take for example Zee Infra. The stock is currently down almost 30% from its lowest target price, which is 300, but the highest target price from HDFC Securities that stands at almost 462. So there is this huge amount of divergence with respect to the lowest target price as well as the highest target price, and most of these stocks, or at least these top 10 stocks, they have completely been off the mark with respect to analyst estimates and have disappointed the street the most.
Thanks so much for putting that into perspective, Yash. Well, those are names on which the street is extremely bullish because their current market price is lower than the lowest price on the stock. Pretty interesting. That's all that we have on First Word today, though. Lots more lined up on Indian Open. We discuss markets and macros with Rajat Jain of Principal Mutual Fund. Will the festive season turn the tide, or has it turned the tide for automobile industry? We asked former FADA President Nikun Sanghi and Ford Point Automotive's Anil Jaktiani, and the impact of strained state finances on public infrastructure projects with Vinayak Chatterjee of Feedback.